All right, guys, I'm going to show you a sick trade we took on the S&P 500 E-minis today. All right, this was just a straight up textbook, perfect, gorgeous trade. Okay, long signal prints right there. Draw the zone, wait for the retracement. Okay, and I'm going to show you how we nailed a massive 40-point winner on the S&P E-minis today using no indicators at all, just pure and simple price action techniques. Let's do this. All right, what's up, guys? It's Mark here at Dino Trading. Hope you had a fantastic trading week this week. It was definitely another wild one in the futures market. Some astronomical, giant moves in the futures markets. And let me start by saying that today was interesting. I was actually having a debate with one of my trader customers, and we were kind of debating the S&P E-minis versus the NQ E-minis, right? The S&P 500 E-mini futures versus the NASDAQ futures. And NASDAQ looked gorgeous today too. I mean, it was textbook setup right here, long signal, draw the zone, wait for the retracement, 200 points on the NQ. It just gives me goosebumps every time I say that. 200 points. What is that? 800 ticks. That's like a potential $8,000 just on a few contracts of the NQ. But here's what I want to get into with you guys, all right? I'm actually starting to fall back in love with the S&P E-minis. All right, for the longest time, I kind of hated this market. There really wasn't a lot of action happening for years, right? You guys know that. You've seen the videos. A majority of my trading is done on just the Dow futures, okay? I've always felt that the Dow futures was kind of in that sweet spot. It didn't move too fast, right? You didn't move too fast like the NQ. You know, there was never really a concern of getting your head chopped off like you would on the NQ if you don't know what you're doing. But the Dow also wasn't slow like the S&P. And that was my conclusion for the longest time. And then, you know, the last few weeks, man, this is no joke. I've been actively looking at the S&P E-minis, and the setups are great, man. The setups are fantastic. So to anyone out there that I've spoken to and I've really insulted the S&P 500 E-minis, all right, if I've insulted that market for being too slow, I take it all back, right? I'm ready to eat my words on the S&P E-minis. It's been fantastic. Now, granted, we're in a period of pretty extreme volatility, so you kind of have to take what you can get while still looking for low-risk setups like this. And don't worry, in a few moments, I'm going to show you exactly how we nailed a giant $4,000 potential trade today. But the S&P is great, man. All right, so for those of you guys out there that are kind of dabbling and exploring with other markets, I don't know if you need to. If you like the S&P E-minis, stick with it, man. I think you're going to do well. If you like the NQ, stick with the NQ. I think you're going to also do very well. What you should not be doing is trading garbage like this, right? How many people do you think this week, okay, last week, last month, whatever, how many people do you think tried to short this market, okay, based on what these candlestick nonsense and candlestick garbage was telling them, right? I sincerely hope that you guys watching this video, you're not an indicator trader or a candlestick trader, right, or a moving average trader or a MACD trader or whatever the case is, right? I hope that the one thing you've gleaned from consistently tuning in and watching these videos is that price action works. A clean chart without any indicators at all is how you find success. All right, so let's get to it. All right, let me show you what I thought was an absolutely perfect trade from today, and you could have not asked for a better setup. All right, so first, guys, you have always got to get to a side-by-side setup. All right, now, if you've seen my videos before, I strongly encourage you to at least have a dual monitor workstation, okay? One chart, or I should say one monitor on the left to focus on the overall direction of the market, okay? It could be going up, could be going down, could be going up, right? You need to have one focus area as part of your workstation, okay, to make a decision on what direction to trade. All right, and these charts make it easy. If it's green, you're a buyer. If it's red, you're a seller. Okay, But what I personally like about the side-by-side setup, okay, is that it really allows you to drill down on a microscopic level while keeping your eye on the big picture. Does that make sense? So this is why I really enjoy a side-by-side setup. I feel that many of you out there who are successful at trading are already implementing something similar. But if you're not, all right, this is definitely something that you should consider. Okay, whether or not you split it up into two monitors, you could probably get away with it on just one monitor, right? Just kind of divide the screen in half like I'm doing here and put the larger time frame on the left and the smaller chart on the right, and you're good to go there, right? So anyway, check this out. All right, watch how I grab the retracement zone with like just 2 clicks of the mouse. All right, so guys, when you identify a bullish signal, okay, which is simply the first green bar after any red, not exactly brain surgery we're doing here, okay? It's color coded. If it's green or if it turns green, it's time to be on the lookout for long opportunities. We're a buyer, okay? But you don't randomly rush in and buy at the top of this bar, right? You get a horrible fill if you do that. You want to wait for a much, much nicer fill, what I like to call a low risk setup, because when you wait for the retracement to happen here, you're kind of putting the odds in your favor. All right, so watch this. I'm just going to draw the zone like this. All right, now watch this. All right, this is a really neat trick. I'm a double left click on the zone here, and watch how I really quickly and easily and ultra fast pop in the retracement zone into the smaller time frame chart on the right. All right, watch this. All right, I'm gonna double left click this. I'm gonna hit the drop down box. I'm gonna make it say all charts. Boom, that one's done. Can you see it here? It automatically drew itself over here. Let's try the second one. Bottom part of the zone. Hit all charts, hit OK, kaboom. That's all you have to do to get the zone from your bigger chart into your small chart. You saw that took me exactly 6 seconds. Okay, if you don't have 6 seconds to draw a high probability zone in your charts, well, you might have other problems in life, right? This is ultra easy, guys. All right, so now what we'll do is we'll maximize the chart on the right, the smaller chart. Why? Because this is the execution chart. The smaller chart is where you get into a trade based on what the larger chart is telling you, right? Which is this nice retracement area. Okay, so pretty much, man, after 10 o'clock, as you can see here, this came exactly at 10 o'clock, and you jump over to the smaller time frame chart. Shame on you if you tried to short this market today after 10 o'clock. Okay, because nowhere after 10 o'clock do you see any red bar, right? And that's why I said at the starting point of this video, how many people do you think got their heads cut off trying to short it here, trying to short it here? You can kind of tell, right? They tried to come in and short it a little bit. It created a bit of a wick, and then boom, the trend just rolled over them, right? So anyway, check this out. So back to the smaller time frame chart, right? What do you do inside this retracement zone? You've seen this 1,000 times. If you're a long-time subscriber, there's absolutely nothing new here. If you just found my channel the other day, then this is how easy it is to take a trade within context of the trend. You draw pivot points inside the smaller chart. Okay, a pivot point is simply the high or the low of every reversal bar. In fact, all of these would also be pivot points, right? But pivot points are only relevant within the context of a retracement zone. Makes sense? So almost immediately after 10 o'clock, price dipped back into the retracement zone, and man, you are drawing that trend line just like this, and you are taking the trade when it breaks the trend line right over here, and you're placing your stop 1 tick below the previous swing low. Makes sense? Again, there's nothing complicated whatsoever about what I just did. I mean, a 6-year-old could do it, right? Now check this out. If I squish this in here, all right, let's squish this in. I mean, you know how this trade played out, right? This was a massive winner, huge trade using just a simple trendline approach, no indicators at all. And everything you saw me do inside the retracement zone, okay, on the S&P Eminis today happened right inside this area right here. In fact, I would be so bold to say that the concept of trend lines actually nailed the low to the exact tick. It was about 33.16, I think, right? And this thing just stayed long and strong all freaking day. Shame on you if you tried to short this market when it's so clearly and obviously telling you it's bullish, right? So anyway, guys, these are some scenarios where a side-by-side approach to the market can really help you. Of course, you still got to have the right charts, you still got to have the right trading software and discipline, and of course the right mindset to be able to properly forecast this trade. But I mean, if you were looking at these dyno charts today, this was like taking candy from a baby today, and it was just a really solid trade. All right, so guys, I hope you found something really informative from watching this video today. If you liked the video, definitely subscribe to the channel if you haven't already. And if you'd like to get some details on these dyno charts, get in touch. Guys, thank you so much for watching this video, and I'll see you on the next trade.